Joining us here at Post 9, UBS Alli Partners Managing Director, Alli McCartney. Alli, it's great to have you back.
Good morning.
We kind of teased you up with this idea of tech and valuation and why you should, keep the faith?
I think you have to keep the faith. Personally, I spent the last week in Silicon Valley, and that was a very interesting time to see all of the excitement, enthusiasm, and how much further they are in using some of these technologies in areas like public health, healthcare, data administration. It's really fascinating. But if you look at tech, it's going to be and has been growing 2 to 3 times the market, right? And so that's what you've seen. And there's sort of these incremental layers of tech, be it semiconductors, be it AI, be it cloud computing, maybe not software, as we've seen some of the last couple of days, that we still think are going to take the market forward. And the other thing is that we are conditioned since probably the dot-com era to think about tech as growth and risk. But the truth is that the majority of the companies that have been on the move and growing revenues significantly are not those kind of companies. They have strong cash on balance sheets. They're increasing margin. Their free cash flow is fantastic. So these are almost like the growth defensives or tech defensives. And so if you can play tech in public markets and private markets, if you can play it in AI and barbell that with a little bit of software, a little bit of cloud computing, and if you can do it geographically, because remember, tech is the most global sector in the S&P. So most sectors get between 30 and 40% of their revenues from outside the U.S. Tech is above 40.
So works in a lower growth environment?
Works in a lower growth
or
environment.
a higher growth environment?
I mean, that's the idea, right? And we've seen, you were talking about this market and what happened last week. What we've started to see is this flip-flop between some weeks are driven by AI and earnings exuberance in that space, and some are driven by the Fed, Treasury auctions, interest rate volatility. Last week, it's not surprising that what happened last week happened in terms of volumes were about 20% down. Post-Memorial Day, people aren't in the office trading as much. May rebalancing, May was up 5.8%. So you started to see people take some gains off the table. And to what I think your next question will be, we are getting some questions about that. Is it time? Should I be taking money off the table? But of course, the issue is, where do you put it? People are comfortable putting it in cash, which is where we're trying to get people off of from the short to medium term. So it's, there are some, as we get into the summer and we sort of hear, sell in May and go away, we'll see what happens this summer.
You have a good stable of clients,
yeah,
right? High income clients. What is sentiment like for the equity market right now?
I would say there is a bifurcation between people who are in the industry or in AI in Silicon Valley, and they sort of want to be all in, and people who have, remember what it was like the first days of the pandemic and are quite happy to go to cash. I will say that people are feeling interest rates. Even if you pay for a house in all cash, even if your leverage is coming down, it's eclipsed levels you've seen in the last generation, and that's meaningful to people. They are absolutely feeling that, and they've felt their tax payments and their continuing tax payments. So conversations about relocating, the majority of my clients are in the tri-state or California. So real conversations about, where do I want to be if I live till 100 and I'm in my 50s or 60s, what does financial longevity look like? What does your human health longevity look like with all of the changes and, incremental appreciations to healthcare? So it feels like the conversation around investments and money is much more than that these days.
This is